is a video work through for the investigation preparation activity. This was actually an investigation that was written a couple of years ago by our learners. So we're just going to go through and discuss the answers and some of the errors and common mistakes that people make on this assessment. So the first question we had was Mrs. Anderson's job title. That was quite straightforward. You just had to read it off the pay slip. It was the accounts clerk. Then they said how many months Mrs. Anderson had been employed by Touchstone as of the 31st of November. Now, this one posed a challenge for quite a lot of people. And the most common answer that I got was 2 years and 10 months. And it's actually short by a month if you do that. So if we look, she started her employment on the 1st of the 1st, 2021. So that means that she worked for the whole of 2021, which is 12 months. 12 months. Then we look at 2022. She worked the whole of 2022 because she's still working there. That's another 12 months. Then we get to 2023, which is the year that we're asking about. In 2023, it says there that we're wanting as of the 31st of November. The 31st of November is really the end of November. So we include November. And we know November is the 11th month of the year. So that gives me 11 months in 2023. So if I write this out, she would have worked for 2 years and 11 months, not 10 months, because you must include November as well, because they said the end of November. If they had only said the start of November, then it would be 10 months. Then the next question we have is show how Mrs. Anderson's taxable income was determined. And we actually were nice in that we gave you the taxable income. And that's not always on a pay slip, but it was there so that you would have the correct values to work with in later questions. So how did they find that amount of 22,815? Well, we know taxable income is always going to be your gross income minus your pension and minusing your charity if there's donations. Those are the two things we're looking for to deduct. So if I look at my pay slip, I can see there is a gross pay of 23,000 and there's a pension of 185 rand. Okay, the medical aid has no effect on this, so we're just going to say 23,000 minus 185 rand, and that will get us to the 22,815. That is for question 1.1.3. Okay. Question 1.4 asks us to write down the tax bracket that Mrs. Anderson falls into. The biggest mistake that I saw coming up with this question was people were using the gross pay. Remember, when we go to our tax bracket, we must use that taxable income amount of 22,815. We also must work it into an annual figure. So the first thing we're going to need to do is take that 22,815 and we need to times that by 12 because there's 12 months and we're going annual. And that will give me 780. So that is now the taxable income, and we go to see on the bracket which bracket it falls into. Okay, and so we just look at our bracket 273,780, and we look into our rows and we can see it is going to be in this second row over here. So you could just write bracket 2, or you could write the taxable income bracket there, or if you write out the formula, that's also fine. Just something to show that you have the correct row. The next question, 1.4.2, asks you to calculate her total medical rebate for the year if she pays a medical aid for herself and her daughter. So it was herself, which is one person, and her daughter. So that gives us 2 people. So if we look at our medical credits over here, which is the rebates, the medical rebates, we have for the taxpayer an amount, and then we have for the taxpayer and one dependent will pay this amount. So we are going to use the second amount because there is one dependent as well, 694. Okay. Remember, a medical aid rebate is made up by, it's always your taxpayer pays an amount, the first dependent pays the same amount, so you will pay double in the end. And then each additional dependent pays a different amount, which is slightly less. So that 694 is actually 347 double. That's where they got that number from. Okay, so we're going to say 694. And then the thing that most people missed here was that they did ask for the rebate for the year. This is only monthly, and it tells you that in the heading of the table. So if I'm going to do it per year, I'm just going to need to multiply that by 12 and get to my answer of 8328. Okay. And that was where the 3 marks were coming from. One was for reading the correct value, one was for knowing you needed to multiply by 12, and then your final answer. It was a slightly generous allocation there. Question 1.4.3 asks us now to determine the taxable income she is going to pay. The total income tax she is going to pay for the month. So we now need to use what we've established in the previous questions. So in 1.4.1, we established the taxable income. In 1.4.2, we established the medical aid credit that we did over there. So we're going to need to use both of those pieces of information. And we also already established in 1.4.1 that we are going to use the second bracket. So we just do a normal tax calculation with the correct value. So we start with the 42,000. $678, and it's coming from my bracket, plus 26% of, and we want the income above. So the income above was that 237,780 minus 237,100. Right? So that's the bracket that you're going to work with. Then you calculate it out, and when you do that, you're going to get to 52,214,80. Okay, remember you should be showing the in-between steps here. And then we know that the next thing we do after we get to our bracket is we're going to take off our rebates. Now, given her age, and her age we can determine from her date of birth, she is over 65. Sorry, she's not over 65. So she's only entitled to that primary rebate. So we're going to say, what is the 52,214.50? We're going to take off the primary rebate of 17,235. And the other thing that we need to take off at this stage is going to be the medical aid. So we worked out the medical aid credit earlier in 1.4.2, and that was 8328. And we get to our total tax for the year of being 26,651 Rand and 80 cents. Now the important thing is that the question does specify they want it per month. So all we do is we take that answer, the 26,651,8 divided by 12, and I get to 2,220,98. And that is my final answer there. All right. Now, if you were somebody who used the incorrect value for taxable income and rather you used their full gross salary when you were calculating, you're only going to lose out on one of those marks. But it's important to notice that we do not use your gross income in a tax calculation. It is always taxable income. Okay, 1.5 was talking about Mrs. Anderson, who's preferring to calculate her tax using the monthly tax tables. And then we've got an extract from the tables there. And they want to show, will her tax be correct if she uses the deduction table? So this was a relatively straightforward question. We once again use the taxable income. So we're looking to see where is the 22,815 going to actually fall into our bracket. So you have to look into this remuneration column over here. You don't want to look in the annual equivalent because it might not be exactly equivalent. So you need to see which range does it fall into. And the range that this one is going to fall into, if I'm looking, is 22815. It's going to be this last bracket over here because it's between 22756 and 22856. It's in that range. So then we know she's under 65. We established that in the last question. So she will just get 219,13. So the first thing you need to do for your answer is you need to state that value of 2913. And then you need to compare that to your previous answer. And in our previous answer, we got to her taxes being 2220,80. Now remember, these brackets and tables work together. So your value should be similar. You shouldn't be coming out with like 1,000 Rand difference between what the tax table is saying and what you calculate with the bracket. They should be fairly close. We also have to remember that the tax table here does not include medical aid coming off. So you also need to take into account that her monthly tax on the deduction table will still need that medical aid credit coming off. So if I take this though, and I'm going to take off a medical aid credit as well, it's still going to go lower than what we currently have over here. And I'm going to take off the medical aid credit of 694. And then I will get to a total of 819. But that's still not quite exactly what the tax table says versus what we calculated it to be. So because of the word verify in the question, we then say therefore it is incorrect. We're looking for the incorrect. Okay, so the key thing here was finding the correct value off the table and then comparing it to our previous answer to establish whether it was correct or not. Then the last question we're asked is to determine her net salary or her net pay B for January, and the B was on the table over there. And you'll notice that we left out the A. So your net pay will follow depending on what you calculated with the bracket. You should have an understanding that we always use the bracket calculation over the table for net pay. So net pay is always going to be gross minus deductions. Just give myself a little bit of space over here. So we have our gross pay of 23,000. We are going to take off that pension of 185. We are going to take away the tax that we previously calculated. So this will be coming from your previous answer, whatever it was. And then we're going to also take off the medical aid because that is showing on her pay slip. And if it shows on her pay slip, it should be taken off as well. And we get to our new net pay of 19,200 Rand and 20 cents. And that will be your value for B.